Imagine having just £100 a month to invest. What can you do? Are you feeling limited because you can't afford a house deposit? You're not alone. Many people want to grow wealth but feel stuck. In this video, we'll explore how to make the most of that £100 and build your financial future. First, let's understand the importance of investing. Investing allows your money to grow over time. It's not just about saving. It's about making your money work for you. With inflation, cash loses value. By investing, you keep up with or outpace inflation. Now, let's discuss where to invest that £100. Consider starting with a stocks and shares ISA. This account offers tax-free returns, making it ideal for investors. You can start investing regardless of your budget. Next, think about index funds or exchange-traded funds, ETFs. These funds track a market index, like the FTSE 100. They diversify your investment, reducing risk. For a small monthly contribution, you can own parts of many companies. Another option is a robo-advisor. These platforms help you invest automatically based on your risk level. They're easy to use and require minimal knowledge. With just £100 a month, you can set up an investment plan with little effort. Let's break it down. Start by setting up a stocks and shares ISA. Choose a reliable platform, then open your account. Next, research ETFs or index funds that fit your goals. Allocate your £100 monthly into these investments. Consider setting up an automatic transfer to enforce consistency. For example, let's say you invest £100 in an index fund. If it returns an average of 6% annually, you'll have over £6,000 in 10 years. This illustrates the power of compound growth. In summary, don't let a lack of funds hold you back. Investing £100 a month can lead to substantial growth over time. Whether you choose ETFs, robo-advisors, or stocks and shares ISAs, take action today. Start investing now, even if it feels small. The key is consistency and time in the market. Want to learn more? Subscribe for tips and strategies to enhance your investment journey. Imagine having just £100 a month to invest. Many people feel limited by their financial situation, but you can still grow your wealth. In this video, we'll explore how to effectively use that £100 to build your financial future. Investing is crucial because it allows your money to grow over time rather than just saving it. With inflation, cash loses value, but investing helps you keep pace or even outpace it. One option for your £100 is to open a stocks and shares ISA. This account provides tax-free returns and allows you to invest within any budget. Consider investing in index funds or exchange-traded funds, ETFs, as they track market indices, like the FTSE 100, and offer diversification, which reduces risk. Robo-advisors are another alternative. These platforms invest for you based on your risk preferences and require minimal effort and expertise. To get started, set up a stocks and shares ISA on a reliable platform. Research suitable ETFs or index funds that match your investment goals, and allocate your monthly £100 into these investments. Automating your transfers can help you stay consistent. For instance, investing £100 in an index fund with an average return of 6% annually could yield over £6,000 in 10 years, showcasing the benefits of compound growth. In conclusion, don't let limited funds deter you. Regularly investing £100 per month can lead to significant growth over time. Whether through ETFs, robo-advisors, or stocks and shares ISAs, take the initiative today. Start investing now, as consistency and time in the market are key. Subscribe for more investment tips and strategies. To illustrate your points about investing £100 a month, consider these examples: stocks and shares ISA. If you invest your £100 in a stocks and shares ISA, over time, your money grows tax-free. For instance, if you invest this amount consistently for 10 years with an average growth rate of 7%, you could have approximately £12,000 by the end of that period. Index funds and ETFs. By investing in an index fund tracking the S&P 500, you can own fractions of many large companies at once. Historically, the S&P 500 has returned around 10% annually on average. If you invest £100 monthly, you could accumulate about £15,000 in 10 years. Robo-advisors. Using a robo-advisor that allocates your monthly £100 based on your risk tolerance, you might achieve an average return of 6%. Consistently investing this amount could lead to over £7,500 after 10 years, showing that professional management can also pay off. Real estate crowdfunding. Some platforms allow you to invest in real estate with as little as £100. While this carries different risks and rewards, it diversifies your portfolio. If invested wisely, real estate can provide annual returns of 8–10%. Learning and reinvesting. As you grow your investments, consider reinvesting dividends or returns to maximize compound growth. For example, if part of your index fund yields dividends, reinvesting those can significantly enhance your total return over time. These examples can help demonstrate the potential of starting small with your investments while emphasizing the importance of consistency and time in experiencing growth. If you have £100 a month to invest, don't feel limited by your financial situation. Investing is crucial as it helps your money grow over time, especially with inflation reducing cash value. You can start by opening a stocks and shares ISA for tax-free returns, or consider index funds and ETFs for diversification and lower risk. Alternatively, use a robo-advisor to automate your investments based on your risk preference. Start by setting up an account, researching suitable funds, and consistently allocating your £100 monthly. For example, with consistent investment and average annual returns of around 6–10%, you could accumulate substantial wealth over time. The key is consistency and starting now, regardless of how small the amount may seem. Like, subscribe and click the bell so you will never miss an episode. Thank you.